Why Israel and Iran will dictate U.S. summer fuel prices. Next on the Energy News Beat Daily Stand-Up. What would happen to the oil market if Israel targeted Iran's nuclear sites, oil export infrastructure? I mean, this is a pretty crazy article from the standpoint of Israel is continuing to threaten Iran. And what this article really talks about is the potential consequence for Israel targeting Iran's nuclear sites and or their oil export infrastructure. We all know the big island, Krog Island, has an export capacity of about 1.7 million barrels per day, which theoretically, according to analysts, could have prices. And if that was taken offline, prices would go all the way up to $90 a barrel. You know, theoretically, OPEC Plus could compensate for the loss. They claim to have spare capacity that exceeds export volume. Iran has also threatened to target energy infrastructure in Israel or other Gulf states, such as Saudi Arabia's Abaqa facility, which was also attacked in 2019. This interesting tit for tat would just continue to escalate until it's a full-on war. If you're an investor and you're looking at what's going on in the space, the loss of Iranian exports could at least drive things up by $5 a barrel. I think it's much more. The production cuts for OPEC could come in and compensate. But point is, guys, oil prices would absolutely go insane if Israel decided to strike Iranian nuclear facilities or target specific oil export. That geopolitical risk that's being baked in right now, I think, is part of the reason why price movement has happened here. We will cover all that in a second. Let's jump to developer request to cancel New Jersey Offshore Wind Project. The Atlantic Offshore Wind Project, which is a joint venture between Shell, New Energies, and the EDF, filed a request to cancel its wind project off the coast of Atlantic City, New Jersey. A quick moment of silence for the dead project. Okay, that was enough. The interesting part is, guys, this is the least surprising news on the planet. Truly, it's the least surprising news from the standpoint of once Trump took office, we knew all of these subsidies would be going away for offshore wind. And so this was left with them attempting to figure out, well, what do we do next? I think the interesting thing to think about is where New Jersey goes from here, because clearly they're not going to get the offshore wind. 49% of their energy mix is actually through natural gas. The crazy part that we found in our research, though, 42% is nuclear, 7% solar, wind, hydropower, and biomass 2%, and coal at 0 percentage points. So a real interesting mix there. You wonder if there is maybe now a pivot in New Jersey to go to nuclear. The difference is they can't really control all that. So I think it'll be very, very interesting to see what happens. But, in a win for whales, in a win for the taxpayers, this wind farm is no more. And I think also with where Shell is pivoting, I'm kind of shocked it took this long, but that is dead now. We had a quick moment of silence. Let's jump over to oil supply tightening in the U.S., what it means for summer 2025 gasoline prices. This kind of plays on, okay, so how does this summer look from a pricing standpoint, specifically as it pertains to gas prices? Well, I think the hard part is there's the geopolitical risk you have to bake into the equation. And I don't honestly quite know what that geopolitical risk is. If you tell me that Israel and Iran are going to start bombing each other, I'm going to tell you gas prices are going to go up. If China and the United States reach a trade deal, there are some tariffs. If we see the geopolitical risk die down, if we see a Ukraine-Russia deal happen, prices could drop a little bit. So I think it all really depends on where you see that geopolitical risk. From a supply and demand standpoint, we're fairly, I don't want to say balanced, but the price is really in its sweet spot. The price is always right, so to speak. So the question is, where does that geopolitical risk? It'll be interesting to see from California perspective. Obviously, this summer will be interesting, but Stu wrote in this little article here, California could see $8 gas relative to in 2026, which could be very interesting. So we'll be covering that. But prices from a gasoline standpoint could be going up depending on what happens with the agreement. Let's jump over and quickly talk about finances, guys. Before we do that, let's pay the bills. As always, news and analysis brought to you by EnergyNewsBeat.com, the best place for all your energy and oil and gas news. Hit that description below for all links to the timestamps, links to the articles. You should also subscribe to the EnergyNewsBeat.substack.com, where we are writing a bunch of custom content that is perfect for for your inbox every morning. You'll get the podcast with some custom thoughts on top of that. Plus, we are putting a lot of custom articles there. It's a great way to support the show. Sign up for a paid subscription if you so choose. You get a lot of other interesting content along with that. That's the energynewsbeat.substack.com. Thank you to Reese Energy Consulting for supporting the show, guys. If you are in the midstream space or in the upstream space and need help with your midstream segment, Reese Energy Consulting works from all different sizes of companies, from two guys in a garage all the way up to the largest publicly traded companies. Check them out, reeseenergyconsulting.com. Tell them Energy Newsbeat sent you. And finally, guys, invest in oil.energynewsbeat.com. If you are wondering, is oil and gas right for my portfolio? Check out our portfolio analysis, where it will tell you, if by answering a few simple questions, whether or not you're a candidate for oil and gas investing, and we will get you a bunch of information to help make that decision and point you in the right direction when it comes to making a decision. It's always a great time to invest in oil and gas. The question is, what type of oil and gas? We try to break that down in our portfolio survey. So check that out, investinOil.energynewsbeat.com. Let's jump over top line headlines. S&P 500, NASDAQ up about 0.5 of a percentage point. 2 and 10-year yields basically flat. 10-year was flat. 2-year was actually up about 0.5 of a percentage point. Dollar index flat. Bitcoin sitting at about $110,000 a coin. Crude oil, WTI down to 64.98. Hovering at that $65 mark. Brent oil, 66.40, down about 1.5%. Natural gas down to about $3.55. A lot of what's going on right here is the reason why prices have been elevated. Again, is that geopolitical risk, specifically what's going on between the U.S. and China trade talks happening in London right now. And then also this Israel-Iran stuff. So there's a lot of geopolitical risk baked into this. It was interesting. The EIA did show about a 4 million barrel draw from the Strategic Petroleum Reserve. I find that interesting that prices responded negatively. Again, it goes to show you that headlines are really driving this news and not fundamental supply and demand. And finally, guys, Nigeria's $5 billion backed oil loan from Saudi Aramco has been delayed by a price drop. So they agreed to do a $5 billion loan back in January. That was between the President Bola Tinubu of Nigeria and Saudi Crown Prince Mohammed bin Salman. The interesting part is that this loan now is in jeopardy due to, one, the price drop and nobody able to underwrite the deal. The quote is, quote, "It's hard to find anyone to underwrite it," according to sources. The president of Nigeria sought approval for a $21.5 billion foreign borrowing last month in order to bolster its budget, and that $5 billion specifically backed by an oil facility under discussion would be a part of that. There's a couple Gulf banks and some African lenders associated with it. The difference is that Saudi Aramco wants 100,000 barrels of oil per day for that $5 billion. The problem is Nigeria may or may not be able to keep up with that, depending on all of the other loans that they have. So it's going to be very, very, very interesting what happens there, guys. And if you're an investor, guys, buckle up. But with that, I'm going to let you get out of here, get back to work, start your day. Appreciate you checking us out here on the world's greatest podcast. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.